Because everybody should be able free to want whatever they want. So don't hear Jeremy or I saying that. We're just saying, do you really know why you want more? And do you really have a system that is being set up that actually gives you the outcome you want? Or are you just getting more to have more?
Over that time, I will say I was a lot more happy, and this is full transparency. I was a lot more happy making $100,000 a year versus where I'm at today. The reason being is back then I was still going on vacations. I was hitting 2 countries a year. Right now, more complexity, bigger problems, bigger issues, more responsibility at the end of the day. And even though I can afford more vacations, more lavish vacations, I don't take them. Why? Because of my time, like the lifestyle that I thought I was building forward to be actually enjoyed in this. I don't have the capacity, or at least I've put myself in this mental prison of thinking that I don't have the time.
Welcome back to another episode of WealthWise Banking. I am your co-host, Jason Sipple, along with the one and only Mr. Jeremy Lee Huggins. How you doing, Huggy?
Man, I'm doing great. It's been a busy flying season just coming off the summer months. So things are starting to wind down, tons of weather, lots of cancellation delays. It's been busy, man. It was a busy month.
Your arms must be tired. I know other people are thinking the same thing. Your arms must be really tired. You are looking kind of jacked. I guess flying gets you in shape, doesn't it?
Yeah, I wouldn't say that for some of the captains I fly with. A little pudgy.
And he's
But
just
no,
kidding for any captains listening. We love all of our
no, I'm not.
captains. And if you're pudgy, just do some push-ups when you wake up in the morning. So, Jeremy, what are we getting into today, my friend?
Yeah, so today's, speaking of captains, I had kind of a discussion about when is enough, right? At the airlines, we have a mandatory retirement. It's age 65, and some pilots have an actual number that's in their head, right? And some people are planning to work the rest of their life and hoping to finally get like another job afterwards because they just really haven't prepared adequately. And in these discussions, I got a captive audience for 4 or 5, 6 hours on a flight, per time. And it got me thinking about how does this apply to our audience, right? There's likely for our audience a number right now that's in your head. And it might be an income that you need to earn. And maybe it's a debt that you're trying to clear. Maybe it's like a certain amount in your retirement accounts or like your savings, right? A number that you start to feel financially free. And the problem is that once you reach that number, another one usually takes its place. Surprise, right, Jason?
Yeah, surprise, surprise. You hit one milestone, and we know you're achievers. Builders are achievers, Jeremy. So you hit your first milestone, you're like, okay, I'm here. And you celebrate for what, 5 minutes? You're like, okay, what's next?
Yeah, what's next? I mean, I personally lived this. For me growing up, like we didn't have a lot of money growing up. My family filed for bankruptcy. So for me, my first milestone was hitting six figures. I felt like six figures was the finish line. 100 grand a year. That's what I want to be making. And then once I achieved it, like to your point, it was, okay, I got this number. What's the next one? It was like, well, how about a million? And then when I hit that as a net worth, like the next number was, all right, well, 10 million, right? And along the way, my finances grew. But here's something that people don't realize. Like, even though your finances grow, so do your responsibilities, right? My life over that time became infinitely more complicated. And the number that was supposed to make everything easier
Hmm.
actually didn't, right? That the lifestyle that I thought I was buying never actually arrived.
And that's exactly the question. When we're talking about, if you just think it's a number out there, and I had some actually a member say this to me earlier, Jeremy. She's like, I want this much. I want $500,000 in the next 3 years. And I said, for what? For
Mhm.
what? And that's a question that, like, that's the first question I think we start with is, what is it that you actually want? Like, what does 500,000, a million, 10 million, 100 million give you? Like, what
Yeah.
does it actually give you in terms of your lifestyle?
Yeah, a lot of folks, to your point, are asking how much is enough, but I think the better question really should be, what is this money supposed to do? If you start asking that, what is this money supposed to do? And for a lot of the members that are listening here, we're talking about generation one. And most of us, we think that we're generation one, but guess what? You don't actually get to be generation one until you're building to be able to pass something on to generation two. And most of us, the reason that we're generation one is because we want to pass something on, something that's today, tomorrow, and beyond us. my parents were not generation one, right? And their parents were not generation one because they never passed anything down to us. So the person here who stops waiting and starts building long term,
Mm.
thinking generationally, that qualifies you to be G1, to be generation one. So that's what we're going to be talking about today.
You know what we're going to do as well? We're going to make some Generation 1 t-shirts and swag at some point, Jeremy. I just had an opportunity right there. I would be proud to wear a t-shirt that said Generation 1. Would anybody else here let us know? I just thought of this. So if you don't want to wear a Generation 1 t-shirt, I totally get it. But I just felt proud in that moment to be part of the Generation 1 group. And I mean that with all my heart. Like, I know that lots of things were passed down to me. And I actually had another person say this to me, like, look, Jason, I don't feel like I'm generation one because I learned this from my grandfather and he learned this from his father and so on. So we're always taking all these lessons on, but when we're talking about financial independence and starting ahead of where the last generation left off, passing something on like the Rockefellers or like other very affluent families.
The Waltons, the Mars, the Koch family, right?
Exactly, exactly. And we are, and I learned a fun fact about the Mars family. I didn't know that they had the second biggest pet care or pet food company in the world. Did you know that? And they're a
No.
privately held company. Things we learn, things we learn. That's just a fun fact for all you listeners today. But the point being about being Generation One is it is something to be proud of. And it's an identity that I wear proudly. And I think Jeremy does as well. So,
Yeah, yeah. Let's get some G1 swag going. I like that idea.
yeah. Ooh,
Look,
G1, that even sounds cooler.
yeah, so I think a lot of folks, kind of coming back into this, yeah, and how do we identify being generation one? Well, when we start having these conversations with people, a lot of them will start saying something along the lines of, "Hey, Jeremy, I will start this when I'm ready." Okay. And
Mm,
what do people typically mean by that, Jason? Like, let's explore a couple of these familiar milestones, if we were. Like, what does that mean where, hey, I'm going to start this when I'm ready? Like, what they're looking for a milestone at the end
yeah.
of the day.
Yeah, yeah. When I make X amount of money, when this debt is reduced to this much, when my kids are older, when I have more time, right? When we have our first house, when life feels like it's gonna settle down. I got news for you. All you're telling me is that you're scared and you don't really believe in yourself. And that's why we're here is you're worried that this won't work and it's just another thing what we're talking about today that's not going to actually help you with your progress. And so you have all your wherever your focus, Tony Robbins says it best, it's on a t-shirt that Patty owns, where your focus goes your energy flows. So if your focus is away from the thing that's keeping you stuck, guess what, you're going to stay stuck while you're focused on the other stuff.
Yeah, yeah. And when folks are kind of looking at that whole, I'll be ready when you give those milestones, what is kind of like you said, it's really a little step deeper. They're trying to tie it to an income or like a certain net worth, like an account balance,
Yeah.
or hey, I'll start this when I get out of debt. One thing I want to remind you is life isn't going to send you a calendar invite at the end of the
No.
day, right? You're not
No.
going to know the next urgency or opportunity. It typically doesn't announce itself. So those milestones, the comparisons and the habits and things that we're building around them, they feel vague, which also means they feel safe because you don't actually have to do anything at the same time of feeling like you're having patience, right? Like you feel like it's patience and you feel like it's a responsible thing to do, but you're really in this holding pattern at the same time that life is passing you by. And let's say that you are on the other side of that, right? You are being proactive. Someone reaches these milestones. In my case, it was, all right, I hit this milestone, but
Mm,
then what's next, right? My expenses change, but so do my responsibilities. My standards typically increase. And that's where we see another thing that we learn in a famous book that we both read, right? It's about you earn amount of income, but your expenses also rise to meet that next income, right? You're keeping up with the Joneses at the end of the day.
yeah. Yeah. I call this the oh man, it's just a bigger prison. That wasn't the word I was looking for, but we're just building ourselves bigger prisons if we're not really clear on what it is we actually want. So we just keep going faster and faster and faster. And it is the disease of more. That's what I was looking for.
Season more, that's great. Yeah.
The disease of more. And so that's the first thing. The clearer we are, like freedom for one person is completely different than freedom from another person. But I guarantee that everybody who is taking on more responsibility, that is taking on more risk, to grow more, and is brave and courageous, like everyone listening, then we know that you want an outcome that's more predictable, that you have more control in, that you understand that at some point, if I do these things, I'm actually going to get the outcome that I want versus, like Jeremy said, I get to 100,000. Great. Celebrate 5 seconds. I get to 1 million. Okay, great. Now let's go after 10 million. Why? If you're not going to slow down, you're going to run through the disease of more and keeping up with the Jones until you're no longer here.
Or yeah, and you're just constantly for this regard, you keep putting it back on the back burner and you'll say, "Hey, I'll start this when I'm ready." And for those people who are in that holding pattern, it kind of comes down to like one of two scenarios, right? I'll start this when I'm ready means like, "Oh, I'm too early to the game. Hey, I appreciate everything that you guys are talking about, but personally, I kind of believe that this plan starts after I get that promotion or after I pay off this debt or after I hit that milestone that we're talking about of pushing on further and further and further.
Yep.
And then you got the other end of the spectrum of, hey, I'm almost there, meaning I'm actually building, I'm actually creating assets, I'm achieving my milestones, but guess what? I'm also creating new milestones. I think I hit the finish line, and what I realize is I'm just beginning, right? Both versions of those, I'm too early and I am almost there.
Yeah.
They're kind of the same version of the same problem, right? Or two different versions of the same problem. First is waiting to begin, but the other one is just waiting to continue to accumulate more. And neither of those diminish anything that you're accomplishing. I do want you to understand like your accomplishments, your achievements are worth celebrating.
Yeah.
But the ambition that we have without that direction, every achievement just becomes a new starting line.
Let's celebrate, man. High fives. High fives around to everyone listening. High fives for what you've achieved so far. Bring some energy, bring some fun, celebrate your wins, whatever they are in life. Measure back against yourself. Always be celebrating progress and simultaneously understand that what Jeremy's talking about is a model, a system that is not going to work the way you think it is, the accumulation model.
Mhm.
Are you rushing to be one of the 650,000 401k millionaires? Is a different episode coming up at a different time, but that is something a lot of people are proud of. It's an identity they wear. And then I'm just going to say there are a lot of things that we should be wary of when that is our goal, when that's the number one goal. It's not a bad thing. You got $1 million in a 401k, right? You're
No, I
part of
mean
that group.
you have great money patterns if you're able to achieve that. But at the
Exactly.
same time, that dollar is not the destination, and so people keep putting that off, right? And that's the difference. If you we on a what was it, July of 2025, we brought on Steve, and he talked to us a little bit about the difference between achievement and success. You remember that
Yeah, I do.
discussion that we had?
Yep.
And that was groundbreaking, right? So what
That
I
was a
found in my
deep, deep
personal life,
discussion.
yeah, I've been building a lot of achievements in silos at the end of the day, right? Real estate, investments, getting out of debt, right? Having all these achievements, but they're in silos. None of them were really working together as a system, a coordinated system. And I think that we tend to confuse achievement and success as the same thing, but they're not. When I hit my first six-figure income, I did it while still on a W-2 in the Army and special ops. I had one rental property at the time. It was making $800 a month, right? And I hit that number of $100,000. To me, Jason, that felt enormous. And that was a goal. That was an achievement. It felt like proof that I had actually made something. And today, if I step back and I look at my financial life, I've got more properties and investments. I have more security, more options, but I also have a lot more complexity. I have more headaches. It kind of goes back to that saying, I've heard you say this before, more money, more problems.
Yeah, more money, more problems.
Yeah.
The disease of more, where and we're not telling anybody don't want more, because everybody should be free to want whatever they want. So don't hear Jeremy or I saying that. We're just saying, do you really know why you want more? And do you really have a system that is being set up that actually gives you the outcome you want? Or are you just getting more to have more?
Yeah, yeah. Over that time, I will say I was a lot more happy, and this is full transparency. I was a lot more happy making $100,000 a year versus where I am at today. The reason being is back then I was still going on vacations. I was hitting two countries a year. Right now, more complexity, uh, bigger problems, bigger issues, more responsibility at the end of the day, and even though I can afford more vacations, more lavish vacations, I don't take them. Why? Because of my time, like the lifestyle that I thought I was building forward to be actually enjoying this. Um, I don't have the capacity, or at least I've put myself in this mental prison of thinking that I don't have the time to actually enjoy my life because I keep putting this number off. I keep building. And if I just do a little bit more, next thing you know, another year went by. Yes, on paper, I'm more successful. But in terms of my actual quality of life, I would say that I also have these financial handcuffs I've sort of put on myself.
Again, and thank you for being vulnerable. I think we can turn this into a session to help you, brother, move forward and discover what you really want. But I know if the listeners, our builders, are identifying with this, the what we're talking about is, has your growing income created more freedom or primarily allowed you to carry more responsibility?
Mhm.
That's what Jeremy and I want to know for you. Like, has like think about when you were making that first milestone you hit. Like, I remember hitting $100,000. I thought life would change forever, and I remember hitting $200,000. I remember hitting $300,000, and I kept thinking, wait a minute, it doesn't really feel any different. It
Yeah.
really doesn't feel any different, except you have more responsibility because to earn more money, you have to solve bigger problems or solve more problems. And so you ultimately trade time for money. And what Jeremy was just telling us, there is not a more valuable asset in the world than time. And so again, it's about the intentionality. And we're helping all of you think through systems, think through intentionality, and where are we going together?
Yeah.
Where are we
Yes.
going as generation one?
Right. Having a bunch of achievements are worth celebrating, but success is a completely different thing. And if you look at success as the optimized daily experience that is sustainable over time, the key word there is sustainable. Success is sustainable over time.
Yes.
I had achievements that if you look at it, I cannot keep running at this pace and tempo for my whole life. There's going to be burnout. I can't do it into my passive income years. But if I keep trying to, guess what happens? I end up very well off in my passive income years, completely alone and devoid of life experiences because what I was doing was not sustainable over time. I had a bunch of achievements, but this is a realization that I've had over the last year, talking with over 200 members in a year, looking at their money patterns, looking at their systems, what their priorities are, helping them put together their family constitutions. It's our discussions, Jason, truly that gave me this awakening. And I want to, say our members learn a lot from us, but we also learn from you guys. And this was a realization and having these conversations where these patterns kept showing up time and again that I had achievements, but success being an optimized daily experience that is sustainable over time, success wasn't something that I had a lot of in my life.
I would leave it to you and your big brain to make success. Like, that was a very, very clear way of saying what success is to you. Success is more fun, more experiences with the people I love, the people I care about. It'd be doing more with you, Jeremy. That would be fun. Like, this is one of my favorite times of the week, is coming together and creating with you and helping and answering our members. Like you say, you've talked to hundreds, I've talked to thousands of people, and I learn more from the people I'm talking to about what's really happening out there. And I can tell you that more money is not going to bring you more happiness unless you have more intentionality and you can sustain it over time because you're enjoying it.
Yeah.
Because you're
So
enjoying it.
So all of that is really what is now going to kick off the episode, right? So now we can kind of get into the episode because what we're talking about is intentionality, is giving dollars direction. And if you're G1, you typically want those dollars to have more than one job because life does not coordinate with your plan, as we said earlier, right? You could have an opportunity that needs an answer by Friday. Like in my case, it could be a real estate deal, right?
Yep.
Where the seller says, "Hey, I'll take an all cash offer, but I don't want financing contingencies or an urgency." What's an example of an urgency? Well, how about a roof leak, like hail damage? We have storms, both of us living here in Florida. We got to worry about hurricanes. What if your vehicle fails, right? Or a tax bill that comes in a little bit higher than expected? That is an example of an urgency. Or heaven forbid, life gives you an emergency. An emergency is my kid has a fever at 11 p.m. We have to go to the emergency room. Turns out we need a procedure done. That procedure will not be covered by the insurance carrier for another 6 weeks. How do we fund it? That is an emergency. Or, hey, my parent is in declining health. They didn't have proper long term care or set themselves up financially. I have to help my parent. That is an emergency, right? These are economic crises, different variations, opportunities, urgencies, and emergencies. In either case, the calendar, life didn't put this on your calendar. It didn't give you the warning. So as G1, how do you prepare intentionality while at the same time giving every dollar direction, at the same time making sure that every dollar has more than one job to respond to urgencies, emergencies, and opportunities while building long-term generational wealth? That's kind of how, like, really the basis of it. We feel like this is an overwhelming problem. Guess what? There's a solution. There's a system.
I was getting excited because I could feel us leading up to the solution, right? So we're really saying like life's not going to wait for your money to become convenient.
No, yeah, no, it doesn't. It doesn't wait at all, right?
The-
You can have the same income and still different options at the end of the day.
Yeah, so let's talk a little bit about let's just picture this, right? Let's so everyone's listening. Let's picture two folks, right? Roughly earning the same amount, and we're going to call them Ryan and Maya for this conversation. Now, they're both achievers, they're both earning well. They both actually have good patterns. They're both saving, they're both investing. They both appear on paper responsible. And then three things happen within 6 weeks, right? The child needs a medical procedure, like Jeremy was saying, that creates a meaningful out of pocket cost. A property becomes available and the seller needs a cash commitment in 4 days. A tax bill arrives higher than expected. Same income, same three events. Maya, I like how we use Maya as being the responsible one or the one that is ready. She has a readiness meter as a G1. She knows that she can go ahead and have where her knows where her dollars are going to come from. You know, has a long-term investments that remain untouched. Her retirement account keeps compounding, and she doesn't have to wait for a lender. She can handle the medical needs. She can handle the opportunities. She can handle the tax bill without needing permission from anyone else.
And then there's Ryan,
Yeah, tell us
right?
about Ryan, Jeremy.
Yeah, Ryan has the exact same net worth as Maya. Perhaps he even has more. Okay. But even though they had the same net worth, what's their access and liquidity? For a lot of people, their net worth is tied up in the walls of their personal residence, right? In the home equity. Or for some of the business owners, maybe the money's all tied up in a business or some of these retirement accounts that you can't access until you're 60 years old without selling something, right? Without imposing taxes, penalties, some sort of fees. So what happens to Ryan? Well, Ryan, having the same net worth, same income, he watches that property go out the door and he has to borrow money to pay the tax bill. And then he actually has to go into debt to pay that medical expense for his kid, right? The difference between Ryan and Maya really wasn't the intelligence between them. They were both same net worth, same income. It's whether or not the dollars that they accumulated were prepared and positioned to have multiple jobs, or were they tied up? What was the access? What was the liquidity? What was the purpose of these dollars, right? As generation one, we don't have the luxury of siloing money for specific purposes. We need our money to be ready for opportunities, urgencies, and emergencies.
Super simple, right? One person experiences stress, right? Ryan becomes reactionary. And Maya has money that's available that she can use. And probably, I would guess Ryan's probably feeling a little bit jealous of the opportunity that Maya just had and said, why not me? I make the same money. I work just as hard. I'm doing all the right things. And how many people feel like that? I'm doing all the right things. And why is that person winning and I'm not? Well, because they are not reactive when life happens. And Jeremy, you haven't heard this in a while. What's the one guarantee in life, my friend?
Change.
There you go. Really you sing it for me a little bit. So that's it. It's being more proactive in this.
Yeah, is giving preparation at the end of the day. And really, we're giving those dollars direction. That's what we're really, really trying to do, right? Because when life shows up, both welcomed with opportunities, but unwelcome with those urgencies and emergencies, what's your preparedness level, right? And how are you building long-term generational wealth? What is your money actually being used for? And this, it sounds simple, right? But when we start asking the question, what is this money actually for? It kind of goes back even to where we started in the beginning of setting these income milestones or these dollar amounts, these asset, things. Most planning will start to begin with the which account, which investment strategy, right? What tax strategy? There's a ton of financial information out there, right? Which trust should I be using? I get that
Yeah.
question all the time. Like, what trust? You can have money that is intended to pay bills. It could be intended for growth strategies to protect your family, right? It could be used for charitable giving. Um, it needs to have a purpose, but it also needs to have flexibility. It needs to have access. And you look at financial advisors, in my case and in Jason's case, we find a lot of these folks, financial professionals, they're not coordinating, right? Your financial advisor doesn't speak with your tax strategist, who doesn't speak with your estate planner. And the financial world, unfortunately, is built in silos. So you operate in silos. At least when you go to IKEA, Jason, and you get
Hmm.
the furniture, they give you a plan. The plan could be bad. But when you're building this financial structure of life and you're getting things off the shelf from these different locations, nobody's giving you an instruction manual. And so you build in silos, and that's how you end up with arbitrary numbers, achievements, where you think that you're getting ahead, but really there's no structure behind your system.
No, and I laughed, but that felt so real because that's something, even as much knowledge as we have, that you and I talk about this all the time, right? Like how does your tax strategist work with your estate planning attorney, work with your investment advisor? Like how does everything come together to make sure that your money is working as hard as possible to give you the life that you actually want to live?
Yep. You ready for the answer? I got one.
Oh man, Jeremy knows a lot, doesn't he, folks? Jeremy, I'm ready for the answer, man. Tell me what the answer is.
All right. So when you work with us, the strategy, the way that I implement this, very simple. If you have the ability to write something down, this is what I'd write down. It's four things. It's write it, legalize it, fund it, run it. Those are the four things that we try to do. Again, we're working in systems. I want to give you a systemized process. So the first part of this is write it. Well, what exactly are you writing, Jason? Like, let's explore that a little bit. What is it when we talk about writing? Are people writing down?
Yeah, it's alignment, it's communication, it is looking and saying, okay, in 3 years, 5 years, 10 years, intentions usually only live in one person's head. So, how do we go ahead and have that conversation with our spouse, with our significant other, and make sure that not only are we aligned in our goal, our destination, right? If a captain doesn't have a destination, you're never going to get there first. And then you want to make sure that your children that they're not just receiving assets, they have to understand the purpose. Like, what are our values? Where is our vision? Where are we going? And again, this is a way that we can stay proactive because we know our values, we know our vision, we know where we're going, and we're making it explicit versus being reactive when it's just left for someone else to decide because it stayed in our head.
Yeah, this is very, very important because it's the roadmap to who you are today with who you want to become tomorrow. And then as G1, what does your family become generationally? Having that roadmap in place. It's where we give our families direction. It also, in my opinion, it also gives me the permission to say no. Because something that might look like an opportunity could actually get me off track of what's actually important. I'm not staying on track. I'm going after the next milestone. Part of this process can be formalized in what we call a family constitution. A family constitution defines, what does your family stand for? What are our values? What are our priorities? Now, when opportunities show up, are those opportunities that are aligning with our long-term goals? Or am I just looking to obtain the next achievement? Right? The outcome here is to give direction to those dollars. We're defining what our family stands for. That direction must leave your head, because if it doesn't, the wealth can never outlive you. You're the only one who understands the plan. So write it is the first step. Write it, your values and priorities. That's what we're doing. The output is a family constitution.
Family letter, family constitution, a directive, it's something that is literally showing that you've taken what's in your head and you're doing something that less than 1% of all Americans have done to this point. And Jeremy and I know this because we've worked with thousands and thousands of members and we've actually seen. And now what I've realized is when you ask the question, where do you want to be in 3 years? Where do you want to be in 5 years? Everyone's busy trying to get through the next achievement. They're not thinking about where they're going long term. And so this is what we're talking about systems and processes. Okay, but what if we could? What if we could know where we were going in 3 years? Wouldn't you want to know? Once you
Mhm.
want to get that out of your head, there's nothing on earth, there is nothing that you're wearing, that you're looking at, that has been created in life that didn't start in someone's head first. The Empire State Building, someone imagined it, they built it. Everything that's been built has been imagined first. So think about the importance of being clear on what you want, just to
Yeah.
kind of anchor that. And then next, Jeremy, the next part is the part that I'm still working on, because I know you're going to tell us what it is. We told you it's a 4-step formula. We're going to write it first. Number two, we're going to legalize it. The
Yeah.
next step
Legal.
is putting legal structure around what you define as important.
Yep, that's exactly right. That legal structure can come in different forms, okay? The way that we're going to do it generationally is a trust. People overcomplicate trust. To be very clear, trusts don't have to be overcomplicated. Really, what trusts are at the end of the day is just helping to define who controls what assets. Where does the beneficiary go, right? How do we want to do distributions? What is it that we're trying to protect? What is it that we're trying to pass on? If we got very clear in step one, write it, our family values and priorities. And we're taking that family constitution. Well, my goal now as G1 to create G2, 3, 4, and so on is put legal structure around my values and priorities. It's why at that point you actually need a trust. A will is not enough. A will is only going to still send your estate through probate, and it's going to settle what you have after the attorneys and everyone else takes all their fees out of everything. We want a proper trust. A proper trust depends on your family, right? Your family structure, on what you guys define as important.
Yep.
If it's a living trust, it's going to be on specific your state's laws, right? Irrevocable trust, a little bit different. It's going to depend on your assets. It's going to depend on the taxes, right? We want to help you keep more of what you make, which is why tax strategy has to be brought into this. Fortunately, Jason and I know some incredible tax strategists that can help you keep more of what it is that you have. That way you can multiply it across generations. So that's the first two steps. Write it, our values and priorities, creating a family constitution, and the very least, a minimum of a letter. Then we're going to put legal structure around that with the proper trust. So write it and legalize it are the first two steps. The fund it part is what a lot of financial advisors. So that's step three is fund it. Fund it is the part that a lot of people like to lead with. I'm going to tell you, I don't think that's the most important step. After doing this for years and messing up my own structure, Jason, fund it is not the most important step, but it is the one that most people want to talk about because it's directly tied to those achievements that they're
Yes.
doing, right?
Yes. Yes. And again, it's being intentional. And all Jeremy and I are saying is our builders, our members, we talk to you, we listen to you, we're hearing you. We identify things that you actually want. You don't know you need it yet, but we're telling you that you need to know where you're going by writing it first, even if it's on a simple piece of paper, right? Like we have better ways to do it and to lock it in and to make it permanent, but get it out of your head and get it written down somewhere. Then you're going to go and do the planning of it, because if it's not made permanent, then it doesn't matter what you've written down and what you've done. And then next, we're going to fund it. We're going to show you why we're going to take an allocation, a portion. We're not saying this is the solution for everything, but if you want to be Maya and you want to have more opportunities available and be able to respond to urgencies, emergencies, and opportunities, then we want to make sure that we have the foundation. And Jeremy, I also believe this becomes the ceiling or a part of the ceiling or the decoration, because it is what replenishes this system.
Yeah, tax free, by the way. Don't forget that part, right?
What?
So the funded part is just
That's
basically
crazy. Wait, slow down. Get crazy. You guys are crazy. I thought we're my favorite. Tax free. We don't talk about tax free stuff here. We tax advantage, Jeremy. It's tax advantage. I'm just kidding.
not if you have the right trust, it's not. So remember, I'm a big trust guy. The funded part is basically ensuring that the resources are reinforcing your plan at the end of the day, right? You could have a great family constitution, you could have a fantastic trust, but if there are no resources to reinforce a plan, guess what you end up with? It's basically a good conversation, and depending on the type of trust, maybe an expensive piece of paper. How we do it, Jason and I, what do we like to fund, right? Inside of WealthWise Banking, what we do is one of the tools that we use for the funding layer, making sure the resources there to reinforce the plan, is a properly designed high cash value life insurance policy, right? It's built for early liquidity. It's built for early access. How early, Jason?
Within the first 30 days, Mr. Jeremy.
Yeah.
Within the
So
first 30
first
days.
30 days. That means you have contractual access to the cash value. That cash value will continue growing, compounding. You can access that growth via policy loans. You can do that on a tax-free basis. The protection layer, protection is the waterfall of flowing down the generational wealth. When you're on this journey of creating all these financial achievements, when your retirement accounts are full, right? When you're having all these assets, I want to give you your permission to spend. I want you to spend them to zero. I want you to enjoy the fruits of your life's labor and at the same time still pass on meaningful generational wealth. We're going to do that by funding the trust appropriately with the death benefits, but we're going to make sure that there's living capital available for all these other opportunities. Remember early on when we started discussing, our dollars have to have multiple jobs. This funding layer gives your dollars multiple jobs. In and of themselves, they give you protection. They give you access and liquidity with uninterrupted compounding. And guess what? You're going to get dividends that you can also access tax free.
Don't forget the protection from one of the biggest wealth killers, which is attorneys, which
Yep.
varies state to state, right? You have all of these things. I actually had a wife, I just thought of this. Had a wife, I was sitting with a power couple, right? They're both crushing life. Like you talk about someone who is achieving and hitting all the marks to the highest percentage. $200,000 here, $500,000 here, $220,000 here, a new property, right? Very little bad debt, doing all the right things. And 45 minutes into our conversation, she leaned over and she goes, "This sounds like it's too good to be true. Why didn't we know about this before?" Right? Because they have three kids. It's like, why didn't we know about this before? Why is this the first time we're hearing about this? Because it has a bad name. Like, you want it. And then as soon as we say the words whole life, you're like, wait, what? No,
Mhm.
Daddy Dave said not to do that. Susie Orman's, I saw a guy in the plane reading the Susie Orman book and I wanted to poke him, but he was a vet and I figured like, hey, he's making progress. Keep making progress. Keep on keeping on, dude. But lastly, this is my most important one, Jeremy. So we've written it, we've legalized it, we have funded it so we can use the money now and it replenishes itself when we're no longer here. The next one, and for generation one, and I actually think that this is the biggest challenge. You know, Jeremy, you call it run it, I call it live it. But the next piece is the biggest challenge for a lot of folks. This is the difference between being the Rockefellers or the Vanderbilts. Is
Mhm.
right here. Is having a family system that only survives when the people expected to use it, understand the purpose, the structures, the rules, which means that someone has to have leadership.
Yeah. This is
Someone
the
has to have
governance
leadership.
layer. This is
Yeah.
what this is. So
Yeah.
this is the part that quietly falls apart to Jason's point. When we're looking at the wealth transfer, so over the next decade and a half, there's 124 trillion with a T, trillion dollars
They
that's
call it the
being
silver
transferred.
tidal wave right now. It's called the silver tidal wave.
And it's happening whether your family's prepared or not. This is the layer, this is the part that we start passing on generational wealth with intention, where your family gets very clear about what it is that's important. Again, the way that I look at it, when we have these family conversations, a lot of people go in and say his, hers, mine. What no one's saying is ours. No one's looking at this as our wealth, our family wealth. And when it's look at as our family wealth. Well, in generation one, you're really the builder. Generation two, you know what generation two is? The steward. This generation two, what we're preparing our kids to do is steward that wealth into the future. They have to be very clear about values and priorities. The trust was just the guardrails. That was a legal framework around it. The resources just showed up to reinforce the plan. But now, how do we make sure it doesn't run out? Well, you have someone to steward the wealth, to follow the plan, to follow the blueprints. This is the governance layer that if it's not done right, your family will lose its wealth by the third generation statistically. It doesn't matter if you're in Asia, Africa, Europe, or the United States, right? Across the board, globally, it's gone in three generations because this is where families fail. It's on the governance side of the house.
And again, I personally believe because I'm living it. I believe, and I talk to other members and clients and partners. This is the hardest thing. We expect, as leaders, as builders, this is a huge fault I have, Jeremy. Just going to share, like it's a huge fault. I say this is what we stand for. We stand for do it now. We stand for discipline. We stand for structure, using our bodies first. We celebrate things. And then what do I not do all the time? I've said it. I expect it. Instead, I've said it. Now let's make it part of our lifestyle. Where I like this morning, I was like, look at both boys' beds. I mean, just this is one thing to pass on things. And I said, that's not made well. Neither one of you. What is this? Like you're both downstairs, you're doing your life. Why isn't your bed made? And so then they had a bed making contest. Who can make it neater? Who can make it look more like your army made bed, Jeremy? And it's just, it's being involved. It's more communication. It's being involved with the expectations you have and then with the lessons. I told Diego today, like, Diego, we're going to take the money you've made. I'm going to show you how to put it into your paid up additions, into your system for your future. And I'm going to go online with you. I'm going to show it. It's the intentionality around the communication. You can't expect things to happen without inspecting them, without going in. And that's what true leadership is. And you do it in a way that's not judgmental too. That's one of my biggest challenges is just to expect it's going to happen. This is where leaders and high achievers probably get frustrated or they want to pass it off to someone else. I'm telling you as a father, as a generation one, there is nothing more important than this layer, than
Yeah,
this
this
layer.
is this is where you're passing on direction, right? Because you can pass on resources, but if you don't pass on direction, all you're doing is putting a silver spoon in that kid's mouth, and he's going to become the antithesis of everything you don't want your family to stand for. So this is where money without direction can disappear within two, potentially no worse than three generations, right? And that direction without the resources it's real. Like you have to be intentional, right? Don't leave your family a plan and resources, but not set them up for success. One of the ways I think about this, Jason, if you're looking at a well-oiled machine, let's call Coca-Cola. Let's look at Apple. All right. Let's
Yeah.
look at these massive companies with great CEOs. They are having a succession plan, a discussion today. That CEO does not step down on his way out, slides the keys across the table and say, "You got this, right, kid?" No. What ends
Yeah.
up happening is they have these conversations early. So why do we treat our families differently? Why are we building? If you're out here and you're actually being a builder and you're achieving and you're hitting all your milestones, let's say you're doing the things, your family is going to inherit a lot of resources or they're going to inherit resources with direction, right? Which one's better? They need both at the end of the day. Like you want to do that succession planning because your children will be the next CEO of your family. You have to run your family like a business. If I need to say it more clear, that's it. Your family is a business. It's your names. It's what do we stand for? What's our mission statement? What's the legal structure around here, right? What resources do we have? That way we can be better versions of ourselves. That way our kids don't have to struggle. We can pass on our family name and make good things in the world, right? That's
And
the
if
direction.
And if that doesn't make sense to you, just think if you're an average earner in the United States, say everybody in your family is an average earner, your family over your lifetime is still going to earn millions and millions and millions of dollars are going to pass through your hands being average. No one listening is average. So thinking about the amount of wealth that each member of your family is going to create over time, you have to give every dollar a job, or guess what? Someone else is going to assign jobs for that money, which is happening with most people who we call borrowers. That's the system they're in. That's what Ryan's doing. Ryan's in the borrower system where he's locking it all up, has no liquidity, has no plan. He's reactive when things happen. We're saying don't be Ryan, aren't we? Isn't
Yeah,
that kind of what we're saying?
yeah. I mean, on paper, Ryan's doing a lot of great things, though, right? He's got a high net worth, great income. For all intents and purposes, he's a rock star. He's just not prepared. And if he's not prepared, it's likely that his family's not prepared.
Yeah,
So
we're
that
doing this
system,
for Ryan. I amend my statement. We're doing this for Ryan. Ryan, if you're listening, we want to show you a system that you can have that's simple, 4 steps. Now we're saying it's really simple because it is. It's 4 words. It's write it, legalize it, fund it, run it. I say live it because I'm involved in living it every day, right? Like I have to wake up and look at myself in the mirror and say, did I do a good job leading my family today? Did they do what needs to be done in our house? Jeremy saw my giant 4x6 board, and
that's
Patty's like,
huge.
Patty's like, yeah, that's what she said. Patty looked at the board and said, there's too much stuff on that board. Like, let's make that simpler. So again, complicated does not make progress. Simple makes it move forward.
Yeah. Yeah. So the process, again, like Jason said, write it, legalize it, fund it, run it, write it. Just in summary, write it is clarify what the family stands for. What are our values? What are our priorities? The output there, if you're looking for outputs, it's a family constitution, it's a family letter. Again, we have a process that will help you build one, right? It sounds complicated. Guess what? There's a process for that too, in building out the family constitution. Once we got clear about what our family stands for, what are our values and priorities, we put legal structure around that. That is the trust. Those types of trusts, don't overcomplicate them. We'll help you. We'll make sure you get the right trust for the stage of life that you're in. Once we have the legal structure in place, we need to make sure that there's resources to reinforce the plan, right? Today, tomorrow, and beyond you. My dollar should have multiple jobs. That's the funded part. We just want to make sure this is not an investment. There's not this, to be very clear, this does not replace your investments. What this does is create the financial foundation so that way you actually have the permission to invest more aggressively. This is a both and strategy. We're just making sure that you have resources to reinforce the plan. The run it piece is the governance. That's the governance layer behind everything that we do because now we're preparing our family to pass on generational wealth. If I'm going to be G1, I have to prepare G2. Who's going to prepare G3? Who's going to prepare G4, right? This is a domino effect with this a waterfall. That's what we're doing. Write it, legalize it, fund it, run it. That's the process. That's a system that we help you implement.
And Jeremy, so I mean, this has probably been one of our longest episodes. I think it's one of our most impactful. I could probably go on and talk about this for another 2 hours. Uh, so if anybody wants to have those conversations with us, Jeremy, where do they go? How do they know how they can implement this strategy that we're both putting into our lives? Again, we live, this is how I look at our life, Jeremy. We live it, we document it, we share it. That's
Mhm.
it.
Yep. Yeah. So you just go to wealthwisebanking.com. That's it. That's where you start. If the conversation here, if this intrigues you, if you want to just see where you're at today and how can you build long term, if you want to stop accumulating achievements and start developing success, go to wealthwisebanking.com and book the call, right? On that call, what does it look like? Well, we spend about 30, 45 minutes with you helping you get clear about what it is that you're building. Like what does your family need to understand? What are the appropriate legal documents? What capital do you have to reinforce the plan? How are you preparing the next generation? That's what that call looks like. That's how we start it, right? Really, what did I just do? Write it, legalize it, fund it, run it. Just a more simple way of doing it. So going to wealthwisebanking.com is how you get started. You book the call, that's the first step to becoming generation one. That's now we're building with intentionality. Now we're building for an optimized daily experience that is sustainable over time, today, tomorrow, and beyond you.
And then you get a t-shirt.
Yeah, I do like the t-shirt idea.
We're because we all know if you're listening to us for a while now, you're already in banking.
You're just not the banker yet. We'll see you guys next Friday. Thank you.
See you next time. Be blessed. Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.